Hello, I'm Tony Kaye. I'm the editor of Eureka Report, and I'm joined today by John Addis, the editor-in-chief of Eureka Report.
Hi, Tony.
Welcome, John.
Thank you.
Good to have you here.
Nice to be here.
Now, today I wanted to talk about the real estate investment trust sector. Inflation crept up 1.3% in the last quarter, still very low.
Yeah.
And I thought we'd apply that back to the real estate investment trust sector in terms of...
Yeah, it's interesting because I think one of the concerns that investors in AREITs would have had over the past few months is that the sector's come back a bit, maybe 10, 15, 18% in some cases, some of the stocks in that sector. And that's largely on the fear that bond yields are ticking up, and that has a very big impact on the sector expressed through the capitalisation rate. So that's been the concern, and that's why the sector has fallen a bit. But I think today's inflation figures should give investors a little bit of reassurance that bond yields are probably unlikely to rise significantly over the next few years, at least in Australia. And that means that even though the sector looks relatively expensive in conventional measures in terms to price to NTA, that the valuations aren't especially stretched, which is why we've got holds on most of the stocks in the sector.
Yeah. Going back a way, probably close to 10 years now, we saw this sector ramp up. It was going gangbusters.
It went mad. It went mad, Tony.
Then it just fell off a cliff.
That's right. I mean, I think there's a lot of lessons from investors in that. And one of them is that when management teams are rewarded for assets under management rather than the performance of those assets, the incentive is simply to acquire assets, and sometimes at any price. And in that lead up to the GFC, the property sector generally, especially GPT, so General Property Trust, which was one of the scions of the sector, Centro was another, and Goodman too, they loaded themselves up with debt. They bought assets at inflated prices. Some went over to the US and bought US shopping centres and commercial office. Yeah. And that all came undone in the GFC. And really the sector spent the past 10 years getting its house in order. So it's reverted to what it should be, I think, and the way that investors perceive it, which is a vehicle through which they can get regular, stable, reasonable income over the long term. And in that sense, the sector has retreated and got back to its knitting. So it's in a much better place now than what it was 10 years ago or even 5 years ago.
Yeah, it's vastly different. Yeah. And the other thing which they've been doing recently, during this year, or several of them anyway, they've been refinancing out their debt maturities.
Yeah.
Playing it safe and using low interest rates, obviously, as a...
That's right. It's a good time to be a property trust in many ways, with money cheap, and investors shouldn't forget the fact that the vacancy rates are still low. The lease expiries, which is a big factor when you're looking at these things from a valuation point of view. I'm not the expert on this. This is Andrew Leggett, who's our AREIT analyst, but they're still out quite a long way. So if you're looking at these things as a long-term investment, I'm not saying that they're cheap, and we as investors like to buy cheap stocks, but we recognise that a number of our subscribers at Eureka and Intelligent Investor and InvestSMART just want that regular stable income. And for those investors who are looking at the sector now and hold some of these stocks, a little bit worried about the recent price falls, I don't think they have too much to be concerned. The sector's probably risen about 50% in the past 3 years or so. And you can't really expect that kind of stuff shouldn't happen anyway in these kinds of sectors, but it has happened, and this recent pullback is probably a good thing, and it just means there's a little bit more yield on offer now than there was then, so it's probably not too much to worry about.
Well, thanks very much for coming in, John.
No problems, Tony. Thanks very much.